Hey there, everybody. Good morning, good afternoon, good evening, depending on where you guys are at. Happy Tuesday. Hey, Mirza, good to see ya. So let's go ahead and get started today. In today's topic, we are going to talk about growing a small account. And I know certainly for those of you who may be younger, right, who are still paying off student loans, this certainly might be something you're interested in. Or if you're like me too, where you're just a little bit more mindful of the capital risk, right? You want to be mindful of what you put out there with the hard money you earned, then growing a small account might be something that you're interested in doing. And so today I kind of want to talk about the ways that I go about trading in small accounts and how I look at growing them, while of course always being mindful of capital risk. For those of you who don't know me, first of all, welcome. My name is Allison Ostrander, and I am the Director of Risk Tolerance here at Simpler Trading. And last year, actually, the last couple of years I've been doing this, but certainly last year, a big chunk of it, I did what I call the $500 challenge, which is where I risk only $500 a month and I look to see how I can grow that. And part of that is to help people with smaller pockets show that you don't have to have a Warren Buffett size account in order to trade successfully, that you can have a very small amount of money that you might have put aside towards a vacation or a fun weekend and show you how you can grow that amount with trading. And it's also to teach about capital risk, how you can keep your risk small, how you don't necessarily have to put $500 into one trade idea specifically and still be able to grow the account overall. And just as an example, in my Thinkorswim account last year, this is what I dedicated to the $500 challenge. And you can see from the start to the end of last year, in total, I ended up taking 91 trades that ended up getting filled. And you can see those trades here. Now, a lot of them don't necessarily have closing orders because a good chunk of my trades were done on SPX. They were end of day kind of pin trades that we did in the account. So I would let them cash settle to, of course, avoid the pattern day trading rule. For those of you who don't know and are looking to trade small accounts, then knowing about the pattern day trading rule is certainly a good idea to get a little bit disciplined on. It is basically where you have to have at least $25,000 in your account in order to be able to jump in and out of trades as a quote unquote day trader. For anyone who has an account under 25,000, which of course my $500 account would certainly be in that category, then you are limited to 3 day trades within a 7-day period. And if you exceed it, you get called out by your brokerage platform as a pattern day trader. And usually your account gets frozen. And what that means is you're not able to open any new trades. You can only look to close out of existing trades that you hold. And your account is put on hold for 90 days like that, to where either one, you get the account above 25,000 so that that pattern day trading rule disappears for you, or two, you just have to wait out the 90 days. Now, they do allow for a reset. So if you accidentally find yourself in this situation and you've never been in it before, they do usually allow one reset for 90-day periods. Double check with your brokerage platform, though, to make sure they allow you to do that. I know Tastyworks allows you to be able to do it like that. But otherwise, you're very limited on your trades. And certainly with the market that we've had the past year, right? Day trading has become certainly a great way to be able to make money without keeping your capital risk on very strongly overnight due to all the volatility and the crazy daily ranges that we've had. And more recently, we've been in a bit of chop. It's the market's attempted to go into a bullish trend. But as we can see within the last week, these daily ranges have started to pick up again to either be above or close to those 100-point daily ranges that we saw a lot of last year. And personally, I am anticipating that volatility to continue into next quarter. So, Being aware of this rule and finding ways to work around it is, of course, very helpful for those of you us with smaller accounts. But I want to highlight here a dollar challenge account that a lot of the trades that we did last year. Notice that a lot of them were still for these opening trades, not $500, right? A lot of these are one contract lot trades. I did quite a butterflies last year. It's a great way option strategy for those of you who don't know to keep risk low and allow for really nice profit potentials. But you can see I never put $500 into one trade. I kept it very small. And it's a great way to show how you can build up your account with a very small capital risk. And I think one of the main focuses in growing small accounts that people sometimes lose sight of is having a really good risk versus reward scenario. So, for example, just on this trade here, a 10-5 broken wing butterfly. And the way that that is set up is, let me pull up my Tastyworks account just so you guys can see this a little bit more cleanly. But let's say we are anticipating SPX to continue to sell off into the close today. And so we come over here to our options chain and we think, right, I'm not saying this as a viable trade right now. I'm not looking at my charts, but let's just pretend we think that this is going to move lower and there's a good chance we'll get down to or below 38.75. So the example of that trade that we just showed is a 10-5 debit broken wing, where you have 10 points of width on the debit spread side of the butterfly and 5 points on the credit spread. And you can see right now, for example, on this trade idea, given for today's expiration, it's about an 80-cent cost basis. Let's say we went ahead and paid the dollar like we did. We actually did that day for this trade here. Well, what's our max profit potential? Our max profit potential is $9, right? That is a beautiful risk versus reward scenario. The other like about this strategy, of course, is that it gives you a slight forgiveness factor, which has been excellent in this market environment. Because especially last year, right, with all the volatility, sometimes you would get the direction correct on how the market could move, but it might go well past the levels that you're anticipating to hold, right? And keep dropping in this case. And so on debit broken wing butterflies, if it goes completely in the money, they cash settle on SPX, that's a cash settled index. They will cash settle for the difference of spread width. So a 10-point debit spread minus a 5-point credit spread means it would cash settle for $5. Well, $5 off of a dollar cost basis still allows for a $4 profit. That's still a 400% return on your capital risk. An excellent risk versus reward scenario still. And so I think one of the keys to growing small accounts is really being mindful of the risk versus reward scenarios that you set up, on top of course, being mindful of the overall capital risk that you put out there. Even with small accounts, there's no need to put all that money into one trade. You can break it apart between multiple trade ideas and have a risk versus reward scenario that can really favor you in trying to build and grow out those accounts. I do see a few questions coming in. RS mentions that there is a new rule that they think out there where it's one reset per account life. I have not heard of that. If that's the case, then need to be very mindful. Sitin, I apologize if I butchered your name, but they also mentioned they heard that it's getting very strict about it and they don't allow for more than one reset. So that's a little frustrating if that's the case. I know it used to be at least every 90 days that they would allow for a reset. So especially need to be mindful if it's only for one account that you're allowed the reset for. Chad mentions that Thinkorswim only allows one reset for the life of the account. And after that, if you get flagged again, you will not have any day trade protection. And while it's under 25,000. So yeah, certainly thanks guys for informing me because last I knew it was 90 days. If you hold multiple accounts under one brokerage platform, then I do know that they look at the sum of those accounts. So let's say you have 3 accounts open and each one has 10,000 K in it. Well, then that in total is 30,000. So that means if I understood Tasty Trade correctly whenever I was talking with them, that means that technically you would be allowed to day trade, but make sure that you double check with your brokerage platform to confirm these things, right? I know every brokerage platform is a little different. So you always want to go ahead and make sure that you're aware of what the rules are before going out there and attempting to day trade. I will say also, this is why, for those of you who don't know, I love the profit recycling strategy as well. This is a strategy I use here quite a bit at Simpler Trading. I don't do it often in the $500 challenge just because usually you need a little bit more knowledge on options, and I try and view the $500 challenge for more beginners. But profit recycling is a great way to be able to take advantage of these intraday moves while avoiding the pattern day trading rules. So that's one of my ways personally to get around it and still take advantage of this. Jean, new to your challenge, can you tell us what you grew your account to last year? Yeah, it's not on here. I know I have a screen where, oh, it is on here. Yeah. So in total overall, I grew the account 23,333. We were up a little bit more mid-year, and what started to happen is, as you can see, right, we had a lot of volatility, a lot more trend direction moves. And then towards the end of the year, still had some volatility, but you can see we started to go into more consolidation overall. And so a good thing about being a trader is keeping track of a trading journal. And so in your trading journal, right, you can make notes of what strategies are working, what isn't working. And so one of the strategies that I was doing a lot last year in the challenge were these end of day SPX pins. And they were working beautifully for a good chunk of the year. And then towards the end of last year, they started to come back a little bit. They weren't hitting as well with the market. I think the the bigger hedge funds started to take note of how those end of day pins were really working, especially because SPX last year all of a sudden added Tuesday and Thursday expirations to where you could trade every day of the week now, a 0 day expiration for SPX. And so they weren't hitting as well at the end of last year. So I probably gave up a little bit of those profits. But this is a great example of the risk versus reward scenario. Did I blow out my entire account by doing that? No, I'm still overall up. And you can see not everything I traded last year was positive, right? I lost $76 on Google, lost 76 on Netflix, lost 316 on Tesla, but overall remained profitable here because I am so strict with self about those risk versus reward scenarios. And I'm very mindful about the overall capital risk I put out there to not blow out the account in general. I haven't done a $500 challenge yet this year just because in general, I have been a bit lighter on my trading. For those of you who don't know me, I am more of a trend style trader. I like there to be a trend to trade. That is just more my personality type. And so I realized we were starting to go in consolidation. And so what does that mean for me personally? Well, it means one, I'm being a bit lighter on my trades in general. I'm not trying to force trades, right? I wait for the market to give me the setup and then take the trade accordingly. And then two, I'm even smaller on my capital risk than I normally am. So because I've been a bit lighter on my trades and I've been even more mindful of my risk, I've been saving the majority of those trades for Simpler and alerting those out to Simpler. But as I mentioned, I do anticipate, based off some longer term signals, that volatility could pick up this next quarter. And so I do plan to jump back into the $500 challenge again. And those trades are alerted out to everyone. So if you aren't already following me on Twitch or over on Twitter, certainly consider doing so. Or if you're not already in the free room at Simpler Trading, feel free to join. I oftentimes post my $500 challenge trades there as well. And then let me keep going with the questions. I see some coming in here. Asking TOS has gotten friendlier about it. I reset, but a warning before you push the buy button. Yeah. And then is your example of broken it's a broken wing butterfly. So if that's what you're asking, yes. Um, this right here is an example of a broken wing, specifically debit butterfly. And mind you, if you jumped into it, it's already double. So we are definitely starting to get some selling in this market. A great example, once again, of first reward there, right? To where you have a very small capital risk. You're already double, if not a dollar profit on the trade. The mark's jumping around quite a bit, but we are looking at it around like what 85 cents was the mark when we first popped it up on the screen here, and now it's already around $2 for cost basis, $1.85 as we trend lower. So it just goes to show you, you know, great, excellent risk versus reward there to be able to trade on on SPX and other trades like that. And Bob, I currently do not have usually for the end of day butterflies, which is what I did a lot last year in the profit and the $500 challenge, and of course in the profit recycling mastery. I usually wait closer into the close to put those on because, like I mentioned, with my smaller accounts, I do try to avoid the pattern day trading rule. And once you're already into a butterfly, depending on what kind of butterfly it is, it's hard to profit recycle that to cover your capital risk and to lock in an overall profit. So what I usually do is I wait closer into the market close, see if there's a solid setup, maybe a direction on how the market could move, playing it from one level into another, and then I set up my butterfly accordingly, and that way I just let it go. And so if it works out, right, great, I win. If it doesn't, then it was a small hit to the account, but it's well within my risk tolerance and it doesn't blow out the account. Still have capital left over to then implement into new trade ideas to ideally bring that back around. And then JP's asking how many 5-hour challenge trades per month or year do you think you may ever do a separate $500 challenge service? No, the $500 challenge I'll probably just keep out there as something, free to help teach people about options trading and how to be mindful of risk. I think risk is one of the most important things around trading, even if you are trading a large account, right? I know our focus today in our talk is on smaller accounts, but risk is really one of the best concepts that you need to grasp when you're trading. And the reason why is because if you don't have a good handle on what your capital risk is, it makes you an emotional trader. It's what I call falling into the dark side of trading, right? You turn into Darth Vader. You basically become a Sith because you end up not following your technicals anymore. You get too emotional. You might be staying up all throughout the night to see what Europe's doing, to see what Asia's doing, what our future's doing. Then, of course, that lack of sleep only builds further into the emotions. Um, and then, of course, you're trading more off what I call hopium, right? Hoping a trade will work out rather than following the rules that should be learning when you're first starting to trade, right? Following the technicals that are out there, giving you that clear picture. And I speak from this from experience, guys. So please don't think that, I'm holier than thou or anything. I say this because I was right there. I did not have a handle of risk or started trading. And when I first started trading, my very first trade was a profit, and I was actually on a winning streak for a while, which I would argue almost worst for me because I didn't have that handle on risk. And so when I took that loss, oh my gosh, I was surprised about how much it ate into my profits and it ate into my account. And then I took a step back, right? I realized what I thought were all the negatives around trading, like staying up late, being stressed. And I realized all of those negativities stemmed from not having a handle on capital risk, which is why I really try and focus on that now at trading and try and teach others about it. So that way they can hopefully get past the hurdles and the road bumps that I had to get through to get to this point today. And so the $500 challenge is really to help out with that. So I probably won't make like a separate service or anything about it, but it is something I do and to continue to do. I just haven't started it really this year because I've been so much lighter on my trading in general. But I do plan to pick it up really within I might start doing something at the end of the really in the next quarter. I plan to do the $500 challenge just because I anticipate there will be more volatility. And with more volatility, usually comes more trend moves, which is my bread and butter to how I like to trade. So, and then how many trades do I do per month? It all depends on how many setups I get. So if I see really clean setups and they're just back to back nonstop, I'll take them, right? As long as they're within my risk tolerance. If there's not a setup, like I mentioned, like the start of this year, I haven't seen as many setups that I personally like for what I look for on trading. So I've just sat more in my hands and I've been lighter on my trades overall. Oh, thank 007. I appreciate that. I'm glad you found that breakout session to be really helpful. Appreciate that. And Paco, I see you over on YouTube. Ain't nothing wrong with that. Exactly. And is a broken wing butterfly one of your favorite strategies, Bob? It is one of my favorite strategies for specifically this market environment. And that's why I mentioned again, guys, if you don't have a trading journal, please consider taking one and using it. Because one, it helps you keep track of the trades. It helps you keep track of what setups are working for you and what's not working for you. And one market environment isn't the same as another, right? If we go back to a 5-year chart, for example, the market that we had 3 years ago is not the same market that we had last year. And so as we'd like to continue to use sometimes strategies over and over again, it doesn't always make sense depending on what market environment you're in. And so keeping track of a trading journal is a really great way to know what's working for you, also to understand when it might be shifting out of that market environment and it isn't working for you. You build a house, it's not like you use a hammer every day to build that house, right? You need a table saw, you need a screwdriver, you need a nail gun. There are so many other things that you need outside just a hammer in order to build that house. And the same thing is with trading strategies in the market environment. Here, for example, right off the lows of 2018, this was overall a bullish year, but our daily ranges, even our weekly ranges, as you can see, this weekly range was 36 points. That's way different than last year, where a weekly range was 270 points, right? Completely different market. And so, volatility, right, in the market that we've seen recently, to me, I love debit broken wing butterflies because one, it's a great way to keep your risk small, excellent profit potential. But two, it also has a forgiveness factor to where, let's say you're right on the direction, but it completely goes past your level here, right? Let's say this is where you had the pin and then drop down and we're right back at the lows of yesterday into the close today. Well, you were right on the directional move. You were thinking that this was going to pull back, but it could have completely blown past your strikes. On a debit broken wing butterfly, you have a forgiveness factor built in, so it still allows for a profit, even if it goes completely in the money, versus a standard butterfly, where it is usually a cheaper cost just to jump into, but it goes completely in the money. You're out that cost basis, right? You're out that risk because you really needed to stay within your strike range. So it is one of my favorite strategies for the past year, and certainly still continues to run into this year with some of the volatile moves that we've had. And for the end of day pins, Bob, I do let them go because I really try to avoid that pattern day trading rule. I think and the $500 challenge last year, I know I can count on one hand the times that I day traded those. It was 11.5 that I jumped in and out of specifically an SPX lotto pin for a day trade. And you can even see that here, right? With majority of the trades, the ones that you see closed were things like Amazon, where there's that risk of assignment. Otherwise, though, a lot of these SPX pins I let go. Here is one I day traded. That was one. I locked in a quick $1.30. So, yeah, revenge trade is absolutely the worst. It's the worst way to trade. And then, and what do I look at before taking a question? So the first thing I always look at is the chart itself, right? The chart and the technicals to me guide on how I want to trade. So If there's not a proper technical setup that I see, then I'm not going to just force a trade to go out there, right? That doesn't make sense. I've worked hard for this money. I don't want to just give it back to the market makers and have them take my money from me. So the first thing that I need is a technical setup. From there, I then go to the option chain because I primarily trade options. And I need to see, okay, now that I know there's a setup, right? And I have a potential target or an idea of where the price might move if it starts to break one way or the other. Then I start to build a trade idea around that. And I say, okay, what kind of trade can I build into? And what does that risk versus reward look like? If the risk versus reward doesn't look good, I still jump into the trade, even if I like the setup, because it's not within my risk tolerance or it just doesn't make sense on the potential profit I could get versus the risk I'm putting out there. And that's just, my preference. There are some traders who are okay with a different risk tolerance and different risk versus reward setups than I am. And that's okay, right? That works for them and that works for who they are and their personality type. But for me personally, I have to have one, the capital risk stay within my risk tolerance. And two, I have to have a really great risk versus reward scenario because the idea is we know we're going to lose guys on trades. That's just fact of trading. If you show me a trader who's never lost on a trade, I'll either assume that they're new to trading and they just haven't hit that loss yet, right? That was me at the start of my trading. That was the case for me. Or they're lying. They're lying. It's the fact of life. We've all have lost on trades. Even Warren Buffett has lost on trades. It's just the way it is. But the idea is if you have a really great risk versus reward scenario, then one winner can help make up for multiple losers. And that's the kind of scenario I like to see. So that way, even if my win rate isn't necessarily the best, it doesn't matter because my profits still beat my losses because I am so strict on the capital risk I put out there, two, knowing that I have a good profit potential to help offset that. And what other strategies do I like? Certainly profit recycling. Is the audio still bad? Let me know, guys. Did it fix itself? Just cleared? Okay, I just caught up on the chat, so apologize if it went a little weird. Maybe I touched the cord there. Time traveled back, right? Uh, but no, I really am mindful of those risk versus reward scenarios. So that way, if I get stuck with a couple losers, the idea is a winner can offset those and then still keep me profitable in the account overall, certainly. But no, I also like long calls and puts. I like debit vertical spreads. Every now and then I'll trade spreads that benefit from theta decay. But as I mentioned, I'm more a directional trader. So that's why I usually lean more towards things like butterflies or debit broken wing butterflies or debit spreads or long calls and puts. And I like to play it more directionally myself. And of course, I use the profit recycling strategy. Which is a strategy that basically helps you avoid the pattern day trading rule. It allows you to protect capital risk within the same day, lock in profits without technically triggering that rule and getting you caught in that pattern in your brokerage account. So I hope that answers your question. I have a few minutes left. If you guys have any last minute questions, let me know. Happy to answer them. Yeah, so profit recycling is a strategy that I have come up with and used quite a bit uh, for a while now, and it's my way of avoiding the pattern dating rule. Let me see if I can find a recent example for you guys to look at here. So it's been a bit choppy, so I haven't had any like necessarily really clean winners, but here's an example of one. Or actually, hold on. Yeah, here's an example of one. So profit recycling and short is a way from building from one option strategy into another. And by doing this, depending on what strategy you're building into, you cover your capital risk, you ideally lock in an overall profit, and then you have what I call a bonus trade setup. So on SPX, for example, back here on the 8th in the mastery, we originally jumped into a debit vertical spread for an 85-cent cost basis. And then a few hours later, after having to sit through some chop and a pullback, we ended up filling on a credit spread for an 85-cent credit. And when both of these are matched together, it might be a little hard to see. Let me see if I can zoom in. I guess I can't. But if you look here, the short strike is 39.60 on the debit spread, and the short strike on the credit spread is 39.60. So what I basically did is I turned my debit spread into a standard butterfly. But by legging into the strategy like this and building up into it, I have done so for a zero cost basis. So I had no risk out there into the close that day, and I had a bonus trade set up. So if that day we closed anywhere between my wings, I would lock in an overall profit. And there are a lot of little nuances to profit recycling that I've learned over the years. There are a lot of different strategies you can start with and then build into. And all of that I teach. I have taught within classes here at Simpler, and I certainly talk about it and teach it in the profit recycling mastery at Simpler Trading as well. So that in short is um, the concept of profit recycling, and that's just one of the ways of how to go about doing it without avoiding the pattern day while avoiding that pattern day trading rule. And I do, Peter, I do post $500 trades in the options room. Absolutely. And Chad, adding profit recycling to your toolbox has definitely changed the way you view trading. Excellent. I love hearing that. It's a great strategy, especially for smaller accounts, because it's a great way of really being mindful of your capital risk and protecting it, but giving yourself a really excellent profit potential. And then it is good to close SPX spread if we can afford a day trade. Absolutely. Can we at the time like buy a put spread to lock in a profit? Yeah, you can absolutely do that, RB. It just like I said depends on what strategy you're building into. You have to be mindful. Like I said, there are a lot of little nuances I've learned over the years on how to be successful with that strategy, certainly. Yeah, so in the example I showed, so let me just show it here on the option chain to maybe make it clear. So in the example I showed, I started with a debit put spread. And right now, this is $1.30. If we move 20 points lower, right, then we know that the spread will go 20 points in the money. So if I add on the corresponding credit spread to turn it into a standard butterfly, well, after it moves points lower, that credit spread is going to be worth more. Typically, depending on the K in your strikes, it's going to be worth more than what you paid on the debit spread. So when the two are combined, the premium here is greater than the debit you paid, which means the total net is for an overall credit. Now, obviously, if I were to open this all in one order ticket, my brokerage platform wouldn't allow it. But by stepping into the trade the way I do, it basically locks me in this example, this hypothetical example, it locks me in a dollar profit. So the worst case scenario is I walk away with the dollar, and then I still have a bonus trade into the close that has a max profit of $6 if I get the pin. Because you can't lose on both sides of a butterfly. And you don't have to do it as a butterfly, right? There are, like I said, a lot of different ways to go about doing it. You could start with a long put and go into a vertical spread. You could go into a broken wing butterfly. You could go into an iron condor. There are a lot of different ways to go about doing it. That's just a common way that I like to do it personally. So, and certainly, guys, if you want to learn any more about profit recycling, certainly feel free to come around to simpler trading. Like I said, I do have classes that go really in depth about it. The very first class I did on profit recycling was like 6 hours long just to go over as many of the details that I know about it. And it's certainly something we do a lot in the profit recycling mastery. But that is my time, guys. So thank you so much for joining me. I hope it gave you at least a little bit of education on things to be mindful of when growing small accounts, right? Like I said, you don't need a Warren Buffett size account in order to get profits at the end of the year. If you have a really great risk versus reward scenario, you can have your losers be offset by your winners and still keep you net ahead at the end of the year. So, you guys have a wonderful rest of your trading day. As always, may the trade be with you, my fellow Jedi. Stay out of the dark side of trading, and I look forward to talking to you next time. Bye.